Hey guys, welcome back. In today's video, we are talking about AMC taking off, the huge calls on AMC, 852 billion lost, and many more in this video. First, we're taking a look at this. Green day, AMC isn't going bankrupt. Red day, AMC isn't going bankrupt. I can still buy for under $2. They haven't closed their short positions. I hold for free, and the box office outlook for 2022 looks amazing. What is the catch? And so when we take a look at AMC currently, we can see that we ended Friday off with down 8.67%. However, when you take a look at what has been happening for AMC, nothing has changed apart from the fact that AMC is growing more than ever. The fact that the box office is growing bigger than expected. And so when we take a look at this right now, AMC is showing no signs of bankruptcy. AMC is showing no signs of weakness. AMC is showing pretty much zero signs of negative sentiment. Now, when we take a look at the positive sentiment, and it isn't say this is groundbreaking, but when we talk about how well the box office is doing, how efficient AMC is becoming, when we talk about the record attendance, when we talk about the increase in revenue and what we will see for the Q2 earnings, these are all majorly positive. Once again, not something that is groundbreaking, but still majorly positive for AMC, yet we're seeing these red days. And so it just goes to show that right now, the thesis hasn't changed and that AMC is still extremely undervalued. The apes obviously view this and understand what's going on. And when you take a look at the reasoning for why we're seeing a red day despite all of the good news, you take a look at the dark pool, you take a look at the FTDs, and you start to understand what happened. But also it's about the shakeout attempts from the short sellers. What's your bet on remaining number of shakeout attempts before AMC takes off? Because we have to remember, AMC, it's at its prime right now. We've already seen how well the box office is doing. We've seen how well AMC is doing, and we talk about what the future projections are. And many people have already started to put and accumulate their positions in AMC. And this is what we've said with the fact that they understand what the future of AMC lies, what it means for AMC. And during this time, and it will be the most difficult time, is that they know that going on to Q3, Q4, going into next year, the box office is going to be extremely big. AMC is going to still have the majority market share and potentially even more than what we have now. And they're going to increase their attendance even more. They're going to increase their efficiency even more, meaning more revenue, more profits. All of this means AMC is going to have a very, very big run up. And so they want to accumulate. The key word here of day is, of course, the institutions, the market makers, because we've already seen how they don't want retail to make money. Institutions only want institutions to make money. And so it's in their interest right now to accumulate AMC as much as possible, as cheaply as possible. Now, both things are extremely difficult. The reason why that is because firstly, the fact that these institutions want to accumulate as much as possible, and especially they want to accumulate real shares and not synthetics, is so difficult because apes have been constantly buying, apes have been constantly holding and not selling their shares. And so these institutions are firstly finding a hard time to buy actual shares, but secondly, they're finding a hard time to even buy shares in general because they don't want to create synthetics. And so that's the first problem. The second problem is, of course, keeping AMC cheap. Now, when we take a look at this, AMC is undervalued. AMC is cheap, but this comes at a cost because they know that if they're not spending their resources and allocating their capital into suppressing AMC, we're talking about dark pools, synthetics, FTDs, options, tokenizations, and many, many more. If they're not allocating their resources onto these things, then AMC will easily run up 10, 20% every single day. We've already seen recently how well AMC is doing, 9% following to 22%. This is something that's easily achievable for AMC and is only going to continue to be so unless they do what they have been doing, which is the dark pool, the FTDs. And that's what we said with how they're still finding it difficult to suppress AMC because apes constantly are buying and they can't hide the pressure forever. And we have to understand that right now, going to the end of this year, kind of just already ongoing, AMC's cash flow, AMC's earnings, AMC's fundamentals is going to be extremely positive. This is something we have already been paying close attention to, and it's something that we've already said is going to continuously grow. We've talked about how well the box office is doing. We talked about how well AMC is doing. We talked about the investment in infrastructures that AMC is making. So you can imagine how big AMC is going to get and how well they are going to grow. When we take a look at here, this is just the showcase of what we are saying. What we have right now is the box office theory now showing Q2 pace of $3 billion domestic. And so we are already seeing how the projection is getting even bigger. Bear in mind that the majority of box office in a year comes from Q3 and Q4. The fact we've already seen how well Q1 has done, the fact that we're seeing Q2 not only doing better than expected, but the projections is still ongoing, it already talks about where we are at. And so Q3, Q4 is going to be big. I think a lot of people are eyeing up this Q2 because this Q2, especially with the earnings coming out, will have a lot of future value for AMC because it shows about how well AMC can do in Q3, how well AMC can do in Q4 when you take into consideration how big the box office is going to get and just ultimately how much money AMC is able to make, because we know that AMC has been using their capital and liquidity extremely well, whether that's paying off debt, whether that's making into investment, whether that's improving infrastructures and many more. They have all done extremely well, and so that's something that we need to pay close attention to. Another showcase of why the box office growing is directly relating to AMC is because we are seeing how we are at the forefront of benefiting from this. We talked about already with how people are going to AMC theaters to watch movies. We know this because of the record attendance back in May. And what we are also seeing here is how even on the virtual queue for AMC, there is still high traffic with the ticket demand surging. And so you can obviously understand a very simple basic logic is more tickets sold equals more revenue, which equals to a stronger AMC. And that's exactly what we are seeing. Now, obviously the argument you can make here is that AMC is currently suffering from success, and so if they are able to potentially increase their queue, increase all of the processing, that would be even better. But the very fact we are seeing this is just showcasing how prosperous we are currently right now. And for AMC to benefit from this is exactly what we want to see. You can see also directly, so this is online, virtual. What we are seeing right now is for a ton of events. For years, I will check all my local AMC theaters each day to get a temperature check on how hot or cold the theaters were doing. There are occasions, far and few between, where I see almost full theaters and even more distant and fewer between sold out showings. This year though, it's been rare not to have at least few theaters not almost showing full showings every single day of the week, and it's not longer rare to have sold out showings. And so this is just another prime example of how well AMC is doing, not just for when we get new releases and people are going to watch, but on a consistent basis, how well AMC is doing. Just on the whole kind of forefront of every single movie being released, not just one banger movie that's being released, but all movies that are being released, AMC is still doing extremely well. Consistency and improvements, and that's exactly what we want to see. And so this is how we know that going into Q2 earnings, going to Q3 and Q4, that AMC earnings is going to be extremely well. And amidst all of this, you can see, but hey, Cinemark and IMAX are both growing while AMC is down 7%. No reason the #1 theater chain in the world that is busy AF should react differently, right? This is what we've said with how when we take a look at the price of AMC dropping, it isn't because of people selling. It isn't because suddenly everyone thinks that AMC is a bankrupted company and it's not going to do well. Because evidently we've seen how well AMC is doing. And so the fact that we're seeing how big the box office is getting and all of these movie theaters are benefiting from this, apart from AMC, who's the #1 chain in the industry, this just goes to talk to you about the manipulation. But people still understand and realize the accumulation process there is, the discounted value there is, and as Wild said, the shorts are finding a hard time to keep AMC down. You can see here, I'll keep holding strong for AMC's true value. While short and net analysts hammer us with daily attacks, suppressing, distorting, and throwing every trick at this stock, our direct competitor, Cinemark, gets to run freely. So this is how we know that AMC is at a criminally undervalued price. And this is why every single ape understands what's going on, why every single ape is willing to be buying and holding onto their shares and accumulating as much as possible. The more we see the market go up and AMC stays still, the more undervalued we know AMC is. And therefore, we understand how much we are able to make. We understand how much potential there is from AMC. Also, another big thing right now is the calls ongoing for AMC, where open interest increased slightly on the $2 calls for June, but expanded much larger for the $2 July calls. So this is how we know. And a big reason for this is because we see people buying $500,000 of calls for AMC for next month. Now, suspicions is that what if that somebody was the roaring kitty? Now, of course, this really could be a potential because we've seen Roaring Kitty recently being active again. We know his take on GME. We know his take on what there is. And especially when we talk about DFV, when we talk about undervalued, AMC that is right now at one of kind of the highest projected undervalued stock. And so to see that Roaring Kitty could potentially be accumulating position in this is very, very possible. And right now for the short sellers, their problem is we can't create selling pressure. AMC isn't going bankrupt. Those apes continue to buy the fake float we have created and the box office is rebounding. WTF can we do? This is pretty much sums up what short sellers are thinking right now. And is why we've said recently that there's been a illiquidity on the short sellers is because of this. We're also looking at how chart exchange was down for an extended period of time. Now, what we then saw was the off exchange 71%, still extremely high. Last video, we talked about how the average dark pool in 2025 was 25% for the whole market. That is still extremely high because 1 in 4 trade is rooted dark. For AMC, it's 71%. It's almost 3x the amount of the average volume. So therefore, that really tells you about the manipulation that we see on a daily basis. This is also something I found very interesting, something we talked about before, but you can see AMC was at 0.93 and now at 172. So what makes you think that we are selling now? And this kind of just goes to what we've said here. AMC is down 8%, but people are trying to say, when I say people, I'm talking about the media articles and of course the haters. They're trying to say is that because people are selling, because suddenly everyone who have bought in have decided AMC now is a bad fundamental company and that we didn't want to sell at 0.93. But now we're scared because AMC is at 179. So you can obviously see how that logic doesn't make sense. And this is exactly what we talked about with how they're willing to find anything they can use to get and force people to sell. And this is just an example of it, where we've seen in the past social media posts how they naked short prior to the short and distort reports. And we'll also talk about trade settlements not being enforced and billions of counterfeit shares sent overseas. This is just an example of what they're doing. And it's from Citadel report, which we talked about recently. And so when we take a look at how they're trying to also talk about AMC, and we know the sort of manners that they are used to, especially the fact that we are seeing this having an actual lawsuit, it goes to talk about the media articles that are portrayed falsely to try and incentivize people to sell. As always, this is financial advice, so make sure to do your own due diligence and take what I say with a grain of salt. But this is what we said with how people have been using distorted reports to try and give a false understanding for you in the hopes that you make the wrong decisions to benefit them. A thing that I also want to quickly cover is this was the chart where we talked about with how what happened with AMC when Adam Aaron posted to the moon. The purple line was 2021, the blue line is right now. For the first kind of 7 days, we saw the same movement, but then you can see we have now no longer meeting that thing. Isn't to say it's over, but it's something that I still think is pretty cool to keep an eye to. Another big thing is recently what we have seen is that the Mag 7 has lost a combined market cap of $852 billion and is now only up 0.9% since October 29th, 2025. Now, the interesting thing I find about this is that as you're seeing the Mag 7 lose in value, you're starting to see AMC go up. Now, the value disparity is still obviously big because Mag 7's lost 852 billion. AMC obviously hasn't gained 852 billion. But it goes on to talk about what we said with how they're linked to one another. The collaterals that are being borrowed from the Mag 7 are used to short AMC. And when we see the asset prices dropping for the Mag 7, you start to see AMC go up because there's a struggle in margin. There's suddenly a massive collapse in their liquidity. And this is just an explanation of it. Another big thing, GME has just filed that they now have 9% stake of eBay. So we're still seeing this increase. We're still seeing how GME ultimately wants to achieve this goal. And I think that there are still big things coming. It's obviously going to be the next step of owning 10% and then making the next move, the next offer. But right now we're seeing this happen. And if GME is able to make this move, it would be pivotal for GME. Big thing macroly right now. What we have is Blackstone, who are restricting withdrawals from its flagship Blackstone private credit fund. And I think this is very important to note because this really talks about the illiquidity issues that we have always been going on about. And the reason why I talk about this so much is because it's extremely important to understand that liquidity is ultimately what they've been using to suppress AMC. The moment they run out of liquidity, that's the moment AMC runs, and it's why we keep a close eye onto everything. Another big thing where we have the USD Japanese yen above 160. Every time it's gone above 160, government intervention. Now, the thing that we're looking for right now is that government intervention is inevitable. They will do it. It's a matter of, can they be successful? They've done it so many times. It will come to a time where it's no longer successful. And when it's not, that's when you see everything starts to crumble. And that's what we're also looking out for. Also, Virtue headed to Discovery, where again, going back to what they've done to their to other stocks, what they've exploited, just another call out for them. And it goes on to talk about how unfair this market is, but we're seeing changes happening. Another big thing, this is something that we also have been talking about, how recently, going back to the illiquidity, Citadel have been going after these high frequency trading, and they're trying to go after patterns that add small delays to the high frequency trading. And that's going to have a massive effect on their cost, on their revenue, and ultimately their profit. And now we're starting to see them go after it. So you can see that if they are unsuccessful in this, we're going to be starting to see a hit in the revenue of Citadel, which adds on to that illiquidity problem that we were talking about. And then finally, reverse repo at 0.76, still something we're keeping a close eye to. Until it goes to zero, not that much to worry about. But when it goes to zero and it continuously stay at zero, it means that there's no more extra money for these short sellers, and that's when it's game over. As always, this is financial advice, and I'll catch you guys next time.